A significant shift that changes what it means to be financially prudent. Central banks around the world are building up gold reserves at a rate that hasn't been seen in decades. According to recent reports from the World Gold Council, this current level of buying is the strongest level of net demand for any quarter on record, using data that goes back to the year 2000. So this puts the dollar's long-held power in question. So today, in this video, as I dig deeper into this phenomenon, the role of China and the effects of global tension become the main stories that explain this unprecedented gold rush. And as you guys can remember, it's this sudden spike right here that took place in Q3 of 2022 that had everyone in the alternative media speculating on who this mysterious buyer could be. And according to this article, China is said to be the mysterious buyer stockpiling gold to cut dollar dependence. And of course, there's more to this story that's unfolding. You see, in the past, gold has always been a safe haven during times of doubt and has continued to do so with even greater intensity since the middle of 2022. And we all remember what started in 2022. That's when the weaponization of the dollar became obvious, right after the Ukraine and Russia conflict. And so since then, according to this chart, you can see that there's been intense buying by nations at a not so surprising rate, to the tune where it says here, quarterly global net gold purchases by central banks, 4 quarters moving average. And it's good to say, based upon all the events happening around the world, these averages will only continue to climb. So as a result, countries rushed to move their savings away from the US dollar because they were afraid of the effects of sanctions and assets being frozen. And so countries are often reminded of what happened with Iran, Libya, and most recently Russia when it comes to potentially losing access to what's technically yours, but if it's not in your possession, is it really yours? And a closer look here tells an interesting story as to what emerging central banks report buying gold as a financial hedge as well as geopolitical risk. So in the blue here, we have financial hedge, but in the red, geopolitical hedges. And of course, the greatest one is the inflation hedge. To the next one is the performance during times of crisis, to no default risk, to a portfolio diversifier. And amongst central banks, it's a highly liquid asset, all the way down to geopolitical diversifier. And then second from last, sanction concerns. And so with the recent gold buying splurge from central banks, that lets us know that something is brewing, if not already baked into the cake. Because there's a reason why central banks are buying so much gold, especially in the emerging markets with countries like China, Poland, and India. Now, of course, there's many reasons why China and India is buying a lot of gold. I'm sure it's from a monetary standpoint, as well as an internal financial capital buffer for their own economies. And then keep in mind that both of these nations here have the largest population amongst individual countries on the planet. And then you factor in their citizens also know the role of gold as a savings vehicle for their personal finances. So that's even more of a reason why these nations might want to have gold as an anchor, because it's part of their popular psyche. If we were to take a closer look, that it says here, while most central banks' gold buying is now unreported, 6 emerging central banks drive all reported net monetary purchases since 2022. If we were to go back in time and look at gold purchases over a decade ago, to the far left here, we can see that from the first quarter of 2010 all the way up to the second quarter of 2022, in the dark blue are the reported allocations to gold from emerging central banks, of which at that time the light blue was unreported. Now fast forward to Q3 of 2022, through this previous first quarter in 2024, we can see a major difference here of unreported gold allocation amongst nations, to the point where it's almost 3 times as much gold accumulated that's off the books. And then as we look at what nations this is comprised of, it's led by a very small few. So if we go to the same time frame from 2010 Q1 all the way up to the second quarter of 2022 to the left here, we can see a large assortment of nations, all the way from the purple being other or non-listed, and the green was India. Then you got Poland and Turkey. And at the very bottom, you have China, wherein you fast forward to the last 2 years, you have China taking up over 1/3 of recent gold purchases, followed by Poland next, with Turkey stepping into the ring as well with a higher allocation, Singapore, India, Qatar, and there's a little bit at the very top, which is Russia. That's a big shift in the monetary order right there. So what does it all equate to? More central banks over the last 2 years have taken a liking to accumulating gold at an increasing rate than they have the previous decade plus. And this is not by coincidence. Clearly something's brewing, and they're getting prepared for whatever it is. And to give you another graph here that just highlights specifically over the last 3 months, it looks like Turkey's been leading the way with China and then India. And then you have other nations like Kazakhstan and the Czech all the way down that also has been allocating to this barbarous relic known as gold. So clearly this is part of a larger plan to lower financial and global risk. And as events happen, these countries are not just reacting passively. They're also planning for a future where gold, a counterparty-free asset, will protect them from their own self-inflicted monetary shenanigans. And another thing worth noting is that in 2022, gold prices became remarkably less tied to standard financial instruments like ETFs. Clearly, we can see here that as the dollar was weaponized in the beginning of 2022, following the Russian and Ukraine proxy war, we see a great divergence in gold ETFs as they begin to sell off, as physical gold accumulation began to take off. At the same time, the physical spot price reached all-time highs in all currencies around the world. This difference here shows an important change. The gold prices are changing from being based on risky financial goods that Western banks can manipulate to being based on physical demand. Clearly, this change is part of a larger, possibly more worrying trend of people losing faith in these banking systems and the groups that run them. And just to show how excited the banks are, there's been a report from Goldman Sachs, while being somewhat mild on the actual price, predicts that gold prices will rise sharply due to the purchases by central banks and an ongoing political risk. The bank thinks that the price of gold could go up to $2,700 an ounce by the end of this year, of which their predictions are based on careful modeling of factors such as the U.S. credit, default swap spreads, and the global shocks. These type of predictions aren't just theoretical. They show that more and more wealthy people agree on how important gold is for a strategy in a world that is becoming less stable. And by now, I'm sure you can agree that central banks' constant buying of gold is more than just a strategy. It presents a looming threat to the dollar's dominance in world finances. This change could clearly start a new age in monetary policy in which gold once again becomes the most valuable form of money, not necessarily to benefit the people directly, but to save the nations, which have been enslaved by the central banks themselves. And why is that? Just like JP Morgan was reported as saying over 100 years ago, gold is money and everything else is credit. And also something worth keeping in mind is the fact that emerging markets, central banks' strong demand for gold isn't just a way to protect themselves from economic and political instability. It's also a move to take more control of their own financial futures. Even more so for countries like China, which according to the figures they've been giving us, which are faulty I might add, they appear to have tripled their gold reserves since 2008. And those are just the publicly available figures. But then again, it shows a deliberate move away from dollar assets as worries about the safety and independence of its foreign reserves grow. So when we think about the rise of gold raises important questions about how long the current global financial system will last and what role traditional powerhouses will play in creating economic paths. With the current trend of people buying more gold may not just be a change in the market cycle, it could also mean a basic shift in the rules that govern financial stability and sovereignty. So from the looks of it, this gold rush, which was caused by fear, strategic forethought, and geopolitical maneuvering, could be the start of a new era in which gold, which was once seen as a pet rock, becomes the foundation of a new global financial system. And while the dollar in of itself is not going away, we still be using the term USD, but the amount of weight it carries on the international scene is definitely changing, and it's becoming obvious because everybody's racing to gold. And so with gold and following right behind it, its counterpart, silver, we can tell that the next couple of years heading into 2030, we might see some figures that we could never have even imagined. But then again, it's not new to you. And so outside of getting physical, there's also other opportunities that we can also look to be a part of. And that's where we get into the mining gold exploration space. Since gold is a hot subject of the day, now might be a good time to share with you a mineral exploration company just came across my radar. For one moment, just imagine being on the brink of uncovering a mountainside that's loaded with gold. What I want to talk about is Rua Gold, a minerals company specializing in gold exploration. And from what I gather, they appear to be shaking up the gold mining scene with some jaw-dropping prospects. And it's a brand new entrant to the market that's only been listed since March. And as you can see on this chart right here, so far this year has been on an upward trajectory ever since it was listed on Canadian Stock Exchange. And at the current moment, it's trading at 18 cents a share, which could be a great entry point given the assets they're sitting on in New Zealand. And speaking of assets, let's start in the North Island, guided by Simon Henderson, who is Chief Operating Officer and a former Newmont expert. You see, Newmont initiated a project on the same island, which was later bought by Oceana, leading to a monumental discovery of over 1 million ounces of gold at about 16 grams per ton. So just to let you know how massive that is, 15 times higher grade of gold than what is currently being produced in the world. And just so you know what I'm referring to here, this is the region I'm talking about. And if this was a standalone, it would be valued well over $100 million today. And the exciting part is the fact that Rua has staked claims to this territory less than 3 kilometers away from the Glamorgan area, and they only have a market cap of just 25 million as of today. But the real game changer is on the southern island. Rua isn't just exploring, they're reviving gold mines that stopped production in the 1950s due to technological limitations. 4 past producing mines boasting gold grades up to 52 grams per ton, far exceeding the global average of just 1.1 gram. And so Rua's plan is to drill deeper and unlock the vast gold resources lying beneath the ground there in New Zealand. And the good news is they're fully funded and fully permitted and have drills turning. So now is probably a better time than ever to pay attention to what's going on out there as a possible investment opportunity. So these projects are located on both the North and South Islands in New Zealand, both right next to major mining camps, to show potential for this company to be a possible 10x company, are already showing some pretty interesting results and opportunities in the days ahead. So if you're interested in finding out more information, check out the link in the description or just visit ruagold.com directly and read their prospectus and get all the information you need moving forward. So once again, just sharing with you some interesting developments in the gold world based upon autographs and charts and stats. I'm sure you can see how serious gold is going to be for the future. And on top of the physical side of things, I think that this opportunity with Rua Gold could potentially be a good opportunity as well for those who like to speculate. So just trying to put it all together to bring to you, give you something to chew on. Drop a comment down below. Curious to hear what you guys thought. If you found this to be valuable, hit that thumbs up button, show your support for the channel. Put this video out there so more people can find out what's really happening in the monetary realm, because it's no longer centered around dollars by itself. And as always, be back for more. Catch you guys later.